Warren Buffett said this in 1992, 6 words that predicted every major financial crash of the last 30 years and will predict the next one too. Imagine the ocean at high tide. Everyone is in the water. Everyone looks like they're swimming. Some are genuinely good swimmers. Others are just standing on the bottom, pretending. You can't tell the difference. The water covers everything. That's a bull market. When prices go up, bad companies make money. Weak managers hit their targets. Risky bets pay off. Nobody questions anything because everyone is winning. But the tide always goes out, and the moment it does, you see exactly who was swimming and who was just standing there hoping nobody would notice. It happened for the first time at scale in 2000. Through the late 1990s, the Nasdaq rose 400% in 5 years. Investors were throwing money at any company with a website and a .com in the name. Pets.com raised $82 million to deliver pet food by mail. Webvan raised $375 million to deliver groceries faster than anyone else. Cosmo.com promised 1-hour delivery of anything, anywhere in the city. None of them had a path to profit. Nobody asked. The tide was high. Everyone looked like a genius. Then, in March 2000, the tide went out. The Nasdaq lost 78% of its value over the next 18 months. Pets.com shut down 9 months after its IPO. Webvan, Cosmo, Boo.com, gone within a year. Over $5 trillion in market value, erased. 8 years later, it happened again. Bigger. Lehman Brothers was founded in 1850. By 2007, it was one of the largest investment banks in the world. The stock was at an all-time high. The bonuses were record-breaking. What nobody saw, or wanted to see, was that Lehman had borrowed $30 for every $1 it actually owned. It had loaded up on mortgage-backed securities, assets that only worked if house prices never fell. The tide went out in September 2008. In 1 week, the stock dropped 95%. On September 15th, Lehman Brothers filed for bankruptcy, $613 billion in debt, the largest bankruptcy in American history, 158 years, gone in 7 days. And then in 2022, it happened again, faster than ever before. FTX was the second largest crypto exchange in the world. Its founder, Sam Bankman-Fried, was on the cover of Forbes, worth $26 billion on paper, called the next Warren Buffett by some. Day 1. A single article on CoinDesk revealed FTX's balance sheet. The numbers didn't add up. Day 2. Binance, FTX's biggest competitor, announced it was selling all its FTT tokens. That was the signal. People started to panic. Day 3. $6 billion in withdrawal requests in 24 hours. FTX couldn't pay. The exchange froze. Day 6. Binance walked away from a potential rescue deal after seeing the books. Day 10. Bankman-Fried resigned. FTX filed for bankruptcy. $32 billion in valuation, gone in 10 days. He is now serving 25 years in federal prison. The tide went out, and there was nothing there. 3 crashes, 3 different decades, 3 different industries. The same pattern every time. The tide rises, and everything looks fine. People take on more risk than they should. Companies hide weakness behind growth numbers. Nobody asks hard questions because nobody wants bad news. And then something small breaks. A leaked balance sheet, a rate hike, a margin call. The tide goes out, and in days, sometimes hours, you see the truth. Buffett's lesson isn't don't invest. It's know what you actually own before the tide leaves. Look at your portfolio right now. If markets dropped 40% tomorrow, what would survive? What's built on real cash flow, real assets, real value, and what's just floating because the water is high? That's the question Buffett asks before every investment. Next video, we break down exactly how he does it, the specific numbers he looks at, the questions he asks, the reasons he says no 99% of the time. Subscribe so you don't miss it. And if you want a full deep dive on any company from this video, Lehman Brothers, FTX, or the .com crash, drop it in the comments. We'll cover it next.